Alright, good day guys, and welcome to another beautiful video tutorial. In this video I want to be doing an explanation for advanced market structure. In one of my previous video I actually explained market structure, but I just did it in a very simple way for beginners and for people that are just starting out with forex trading. Now today we are going to be looking at advanced market structure, how to really understand the market, how the market moves, and all of that. Now, understanding market structure is very important, as it will really help you to be able to make informed decisions. If you do not understand the structure of the market, you will always be running around cycles, and you always keep getting stopped out whenever you take trades. Now, first of all, I want us to establish the fact that when the market moves, when the market is in an uptrend, we are expecting to see break of structures to the upside. That is, we want, let's say when the market is an uptrend like this, we want to be seeing break of structures to the upside, break of structures to the upside, break of structure to the upside. Now, but bear in mind that this is just like a picture representation of how the market moves. This is textbook representation. In reality, the market does not move like this. This is not how the market actually moves in reality. Okay, now, but this is just a diagrammatic explanation of how the market moves when it is in a bullish trend. But in a real time condition, this is how the market moves. Now let me explain something right here. What we have right here is a clean explanation of how the market moves. Now when the market is moving in an uptrend, it's creating higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Now let me explain something before I come back to this place. I want you to really understand this thing very well. Now, in a bullish market moves like this, retraces like this. Now, the whole concept of our valid break of structure is for this swing low that has been formed here to take out the next swing high. Now, we expect this swing low here to take out this swing high, for us to have a new break of structure to the upside. But sometimes when the market moves, market do retraces. The market does not just keep moving like this, like this, like this, like this, and so on and so forth. That's not how the market actually moves in real time, like I was trying to explain. Now let me delete this so that I will explain this in a very simpler terms. Now when the market moves like this, retraces and creates a break of structure to the upside. Now what we have here is a swing low. What we have here is a swing low. Sorry, a swing low, not a swing high. Let me edit this. So what we have here is a swing low. Now this swing low is stronger than the swing high. Now it is the strength of this swing low that facilitates this push that takes out this swing high in a bullish trend. So when you are trying to take trades in a bullish trend, you are more at an advantage when you take your trade from your swing low, hoping that the market will what? Take out this break of structure, will take out this swing high here. Now for those of you who trade with SMC, this will normally be what we call your origin. Maybe after you have seen your break of structure at this point, and then you map out this origin that caused this break of structure. Now for those of you that trade with SMC or ICT, what you normally do is that you position for a buy at this point here. You position for a buy at this point here, right? Position for a buy at this point here, at this swing, from this swing low. That's from this swing low, hoping that the market will retrace to this point and then continue buying to the upside. Now In a bullish trend, you are at an advantage when you are taking your trades from the swing low, because we are expecting that the swing low is supposed to generate strength from buyers in the market to facilitate this push to the upside, which will cause a break of structure. Same case for a bearish trend. Okay, I don't want this video to be very lengthy, but let me just quickly explain. In a bearish market, want to see something like this. Break of structures to the downside. Want to see something like this. Now, in a bearish market, we have our break. We are seeing our break of structures here. Now, in a bearish market, you are at an advantage when you are looking for sales from your swing highs, hoping that it will take out your swing lows. I want you to get this thing. Just pay attention to this video very, very well. In a bearish trend, you are trying to take your sell or your trade from your swing high, hoping that it will take out your swing low to facilitate a push to the downside, causing a break of structure to the downside. While in a bullish trend, you are taking your trade from your swing low, while you expecting that it will facilitate a push to the upside and causing a break of structure to the upside. Now, in a real market situation, this is how the market moves. Let me delete all of these things so that we will understand this before we will go to the chart. As you all know how I teach, I always want you to understand everything with diagrams before we go to the real market chart, so that you will see the examples. Now, this is a bullish market. This market was pushing from this side, created a swing high at this point, retraces to this point, and push up, facilitating a break of structure to the upside. Now, this was the swing low that caused this break of structure to the upside when it took out this swing high. Now, in a bullish market, you want to be seeing higher lows that will be taking out higher highs, while in a bearish market, you want to be seeing lower highs that will be taking out your lower lows. Very, very simple, as easy peasy as that. Now, while I was saying that this is how the market moves in real terms, is because we had this push from this point, came to this, created this swing high, a key level, retraces, caused a break of structure to this upside, retraces, and then created this swing high. Now, this is where many traders used to get it wrong. At this point where this market is at this point where the market created a swing high and it began to retrace to this point, then some traders will start saying that the market is now bearish. No, the market is not yet bearish. The fact that market is selling towards the downside is only a retracement, is a pullback, to facilitate momentum for the next push to the upside. I gave you an example when I started. I said that now that diagram you guys always see that they used to teach you that this is the break of structure to the upside. That is textbook explanation. In real life, market does not move that way. Now, market moves, created this swing high here, and it retraces to this point, came back, retraces. Now, what we are looking out for in this trend, because we know that generally the market is bullish, is that market should not take out this swing low here, because the moment market take out this swing low, let's say market got to this point, retraces, it's not supposed to take out this swing low here. The moment market take out this swing low, it has invalidated the bullish trend. If market come, let's say, okay, let me do it this way. Let me give you a real-time example, something that you can relate to. Let's say this is the swing low that caused this break of structure to the upside. Now, those of you who trade with SMC or ICT or CIT, this is what you will do. You will map out this place here. Waiting for the market to come to this zone so that it will mitigate you at this origin here, and then you keep pushing the market to the upside. Now, what will now happen when, instead of markets to come from this swing high, tap into this origin and push up, but rather did not push up and then take out your swing low. This is what we call market structure shift. Some people call it change of character, where instead of the market to keep going bullish, decide to take out or invalidate your trend. So what just happened here is what we call a change of character or a market structure shift. Now, but that's not my concern for this video. What we're talking about now is that from this swing high, market began to retrace. All this sell is just to facilitate a retracement that will create the next swing low, that will be able to facilitate the next break of structure to the upside, to give us another swing high. Because like I explained to you, in a bullish market, we want to be seeing swing low that will be creating swing highs, in the sense that we want to be seeing higher lows that will be creating higher highs. I want you to understand this very, very well. Now, all these retracements right here, they are just pullbacks in between this swing high and this swing low. Now, I want you to understand something. Now, let's say this is our swing high, right? This is our swing high, and then this is our swing low. Now, this swing low here was the point that facilitated the push to the upside, that created this swing high here after we got this break of structure at this point. Now, whatever is happening in between this swing high, this swing low, okay. Now, whatever is happening between this swing low to this swing high, this swing low to this swing high, this swing low to this swing high, is just a retracement that will facilitate the next push to the upside. Let me change this color so that you see it clearly. Can you see it now? Now, this is where some traders get it wrong. You get the bias totally wrong, because this was the swing high that was created, and this was the swing low that we have. Instead of you to consider waiting for the market to retrace to this particular swing low, so that you can now you can start looking for buys to take out the initial swing high that we have to facilitate a break of structure to the upside, you will now start selling at this point. Now, you can actually trade this retracement, which I will be doing a special video to teach you how to catch all of these pullbacks back to the swing low before you continue to buy. That's what some people call selling to buy or buying to sell, which means that you know that generally the market is in a bullish trend. So since the market is in a bullish trend and you have gotten a break of structure to confirm that this market is truly bullish, you know that anything that is happening from this swing high is just a retracement. It's just a retracement to this swing low in order to facilitate the next push to the upside. If you understand this, it's going to give you a whole lot of advantage when you try to read the market structure or when you try to analyze your chart. Now, we have established that everything that is happening in between here is just a retracement to facilitate the next push to the upside. The whole idea is to trade from a strong structure to a weaker structure. And like I said, in a bullish market, the strong structure is your swing low, because this is what will facilitate the push to the upside that will cause this break of structure, right? And then in a bullish market, your strong structure is the swing high that will facilitate the push to the downside to cause a break of structure to the downside. Now, after you've understand this, let me show you how I use all of this to take my trades. I did a video explaining my secret entry model, how I take my trades using my SMC strategy paired with other confluences. Now, when I open a chart and I see that the market is like this, right? What I normally do whenever I open my chart is to always look out for the most recent break of structure. Now, let's say I open my chart and I saw something like this. What I normally want to do is that I want to look for the most recent break of structure. And where is the most recent break of structure? This is the most recent break of structure. So the first thing I normally do is to identify my swing high and my swing low. Now, this point here is my swing high. Let me delete this to make the chart to be clean. This point here is my swing high, and this point here is my swing low. So I'm not taking any trade until this market retraces back to my swing low. Why? Because this swing low is my strong structure. Because this swing low is what will facilitate the next push to the upside, and I want to be taking advantage of this particular price movement, because I know that whenever the market retraces like this, and it gets to this point, the next thing I'm supposed to see is maybe what? The change of character, and then maybe market will start buying back and keep pushing to the upside. So this is how I take my trades. And if it is in a bearish trend, I want to look out for my swing high, because my swing high is my strong structure, and my strong structure, which is the swing high, is what will facilitate the next push to the downside to cause a break of structure to the downside. So what I will do is that after I've mapped out my swing high, I want to wait for this market to retrace. If this is a bearish trend, right, retrace to this point here, before I'll start selling this market to the downside. I don't know if you understand this. So this is a little bit an advanced video on market structure, just to give you deep insight into understanding how the market really moves. Now let's go to the chart so that I will show you. I will explain all of these things that I'm just trying to use this diagram to explain. Now let me explain this. This is GPP-JPY. This is GPP-JPY. Now let me give an example and an illustration for what I just finished explaining right now. Now, looking at this chart right now, I had a break of structure at this point. Let me map it out. I had a break of structure at this point. This is a break of structure, right? Now, the next question I want to ask myself is, where is the swing low that caused this break of structure? And now this is my swing low. The next question will now be, where is my swing high? Where did the market get to before it started retracing or pulling back to facilitate the next push that will happen to the upside? Now, let me use rectangle to map it out. I saw this break of structure. I map out this region. I map out this region as my swing low. That is the zone that caused this market to break structure to the upside. The next thing I want to look for is the swing high. That is the highest point that the market got to before it started retracing, and obviously this is the point that the market got to before it started retracing. So I will also map it out. I'll map it out like this. This is the point that the market got to before it started pulling down to the downside. Now this is what happened in this market. Let me use this to explain it. Market caused a break of structure at this point here, right? Then it created this swing high, and then it started pulling down, started retracing down to this origin or this region that caused, or let me say zone, let me call it a zone. It pulled back to this zone that caused the initial break of structure to the upside. Now, as an SMC trader, like I explained in my previous video, this is what I always want to look out for. Wait for the market to retrace back to the swing low, which is my strong structure. I know that this guy has to hold for market to keep pushing to the upside. If peradventure the market gets to this point and then breaks this zone, I know that I'm no longer in a bearish trend, because this thing that just happened right here is what we call the market structure, change of character, and it has invalidated this entire trade idea. That means I can no longer keep looking for buys again. That means we're no longer in a bullish trend, because the strong structure that is supposed to hold for this market to cause this push to the upside has been broken. Okay, now look at it. After this break of structure, this is my swing high, this is my swing low. Market actually came back. We tested this zone that caused the initial break of structure to the upside, and market kept buying, buying, buying. And you can see market kept buying. So this is how you will always take your trades if you want to really be a profitable trader. So this is how I look at the market whenever I try to analyze or enter any trade. I hope this video gave you any value. If there's anything that you don't understand, drop your questions in the comment section. I'll be dropping a link to my Telegram community and my WhatsApp community, a community of forex traders where we share ideas, where we drop trade ideas, trade setups, and we learn and we grow together. Do well to comment. Tell me what you think about this video. If you do understand this video, let me know in the comment section if you actually did understand the video. And if you did not understand this video, I will advise that you watch this video over and over and over again. Sometimes market structure can be very complicated and very, very difficult. So you need to take your time to watch this video again and again and again and again. The video is lengthy, it's about 20 minutes or so, but it is worth the while, the watch. Okay, so I believe if you watch this video from beginning to the end without skipping any part of it, you should be able to understand how does the market really moves when it is in an uptrend and when it is in a downtrend, and the zones that you're supposed to wait for the market to come to before you start looking for buys or looking for sell. Because it don't make sense that you're looking for a buy at this point here. Anything can happen. Let's say I'm trying to look for a buy at this point here. This guy can come and take me out because this place is not a strong low, it's not a strong structure. Okay, so do well to like this video, comment, and ensure that you have subscribed to this YouTube channel so that whenever I post videos like this, you will always be the first to get them. Thank you, and see you in my Telegram community and also in my WhatsApp community. Goodbye.